Good evening, all. Ira Epstein of Linn & Associates with your Monday evening metal update, and this is your wrap-up for the 26th of April, 2021, and we're at 6:30. Sorry I didn't put out your weekend updates. I did them for my subscribers, my paid subscribers, but I am busy studying for a series of securities exams that have come up again, and this one I'm getting is a different one that I've had, so it's a lot more studying, and you're never too old to get them, so that's how it worked out, and I just had my weekend taken up. But in any case, I'm done with that, I hope Thursday, and I hope I pass it. But in any case, as we look at the markets, where are we in all this becomes probably the biggest question. The stock market's churning, but making new highs in the process. We're getting rotation. You saw today that the Russell came alive, the S&P went for new highs, the Dow backed off, the NASDAQ soared one more time. We'll look at that all in a minute. In the metals, you've got the copper that has roared. I mean, look at this market. You're pushing 445. So my idea that maybe you'd get up to $5 when all the world economies are back to humming in Europe, more parts of Asia, I think I'm right on that. I don't know that 5 will be the number, but a higher number. You can see you're stable tonight, but you dropped pretty good intraday in the energy markets, and that's because of what's going on with India and how poorly they're doing. But if we could, let's go right now to the gold chart. And one of the things I've been telling you is on this rally where the market could have problems is getting back to that 18-week moving average of closes. And that's just what's going on. On Friday, you had a heck of a nice rally, and then the market gave it all up by day's end. Today, the market's again trying to come up to that resistance. If you want to see, this is what the market did on Friday. And let me get over one more day. That's it. There's Friday. So the market came up, had a heck of a rally, couldn't clear these highs, and then settled all the way back down at 1770, 780. That's a bad number because of the slow stochastics, and I'll show you that in a moment. But this is what the market's looking at right now. If we take a look at the swing line, the pattern is bullish because you have higher lows and a higher high. You'd have to get under this low right over here to break that pattern right now. When we look at moving averages, you've got the 200-day, the 100, the 18. Prices aren't under all three of them, so that's still a ray of hope for those that are bullish, but each time it gets under it, it gives you more and more of a bearish pattern. It's trying to hold that. Resistance, the closest moving average, or where's the Bollinger Band? And you can see it. It didn't hit it now in the past, well, in 3 days, and including today would be the 4th. So the market got up to it, failed back, and when I look at momentum, this is the problem the market had. And I was telling my subscribers this Friday morning when we were reviewing the markets for them. You didn't want to see this market lose the embedded reading. I took a guess the number would be 1777.70. It closed at 80, as you can see. It was just a guess on my part, and that would keep the embedded reading down. Now, one of the things on my charting software I sometimes do is I look at the market, and if I write an update and publish it around 11:30, the market doesn't finish to 12:30. So no matter what I do, I have another hour. It's just an educated guess what it's going to do. But I can go in on my software, and I edit the current bar. So I can change the open, high, low, I can change the last price, whatever, to have an idea, and it's a matter of just playing with it, what number loses that embedded reading. And that's what I did, and that's how I came up to it. You did not gain it back today, which means the odds favor. Price and the 18-day average are going to try to come together again. It's just an odds bet. Trend is up. The bias is up, but that turned down, and you cannot re-embed now until you get both numbers back over 80 for another 3 times. Why is embedding important? Should be your question. And the reason that it's important is it changes the market from overbought to locking in a trend. And when you lock in a trend, the markets seem to go in that direction. Gold has not done that on either side for quite a while. You had one embedded market back here, and you could see what the market did, but that's been in the past almost 6 months. So it's not getting those patterns, and that's fine. Another thing that's happened is you're really developing stiff resistance at 1801.40 to 1805.70. So going home tonight, Trend up, bias up, momentum overbought, resistance where I told you, support 1759.90. The gold-silver ratio continues to favor silver. As long as it's on this basis, underneath it, the lower the numbers go, the less amount of silver to get an ounce of gold. When you take a look at silver, similar to gold, you have an uptrend. We had talked, and I'm not going to repeat it again, the 18-day and these. You had an interesting event, though. Let's give the market a little bit of credit here. If you take a look, you can see the red 18-day average had been under the 100-day average. Actually, that's the 200-day. I take that back in the 100 here. So keep that in the back of your mind. The market on Monday, which is today, if you take a look at these numbers, you just got where in relation to the dark number? 25.62 to 25.60.5. Had not crossed over. Tonight, as we get into it, now you're getting your action where it's 4 cents over it. So you're getting what we'll call a bullish crossover, where the shortest term average is now getting under the the longest term average, and that's another element of support in the market. So I'm seeing silver in a favorable light. Overbought? Yeah. So as a trader, I have a checklist of things when I'm recommending them to my clients. And when I'm doing that, what I'm saying is, okay, bullish on the swing line, bullish in the bias, overbought, not even trying to embed, trade failed, one of those key numbers. Copper market, fully embedded reading, and here's your running with the market. Are you getting what that is? So this play comes about now and offers the opportunities via my enhanced Bollinger Band course on the website under education. That's where it's at. I've created a video for you to see what it is about. It's 13 chapters. This is the setup with an embedded reading that I love to see. And that's where I'll let it go. I think the bulls will buy this market. On the breaks, still looking for the higher highs until the red line crosses and closes back under 80. In the platinum market, overbought but in an uptrend. We've been in one. You can see that over here, you'd hit your first objective. And if you'll recall, this objective has been seeing that resistance point. You backed off and you made another move at it. Now, if you push it far enough, this could become a base for the market to move higher, or it could just fail up here. Right now, again, my checklist. Trend up, bias up, overbought. Same scenario. In the palladium market, embedded reading, trend up, bias up, fighting that number. I say the pros are buying now on the pullbacks. This market, on these breaks, looking for continuation of hitting that upper Bollinger Band. Now, there's a series of rules that in the course that I created which tells you, do you want to be a buyer of it given a certain scenario? I'm not sharing that with you here. In the dollar index, you have the bearish embedded reading. That rules the day. And if you don't believe me, that's great. But look at what it did. You fought your battle. You've been fighting your battle right here where we talked, the 100-day average. If it gives ground, then you're looking for the Bollinger Band. If it clears 91.42, 91.42.5, I'm sorry, 91.42.5, you end the downtrend. You didn't do that. Where's the target now? Now the target's that lower Bollinger Band. We'll see if it can reach to it. Because it's back underneath the 100-day average, that becomes a bit of resistance in the market as well. What else do we have this week? We have the FOMC meeting. They begin tomorrow. They end on Wednesday. No one's really expecting them to spill their beans as to what they're going to do. I'm seeing that the polls that are being taken of the pros, they seem to favor fairly heavily that in the last quarter of the year, there will be a movement by the Fed to begin the tapering. I did a piece today on the taper tantrum for TikTok on Bloomberg. You might want to listen to that. It's a podcast, so it's interesting. You can see how these pieces are coming down. We have GDP on Thursday. So you're going to be watching this on a lot of different quarters. There's going to be a lot going on. Ethereum, overbought in an uptrend, holding the 18-day average and paying attention to the resistance. I want more days to go by on this, but this market has suddenly come alive. And if you saw today what happened in Bitcoin, it went absolutely bonkers. The market tonight's down a little, but I think it was up nearly 11% intraday. So it made back a heck of a lot. Can you imagine you're using this to buy things or sell things, and you're taking it in, and your daily risk is $11, 11% rather. How do you protect yourself? I mean, that's what's wrong here. You want more stability if these are going to be real value points. Right now, they're just one tool, in my opinion, a speculative point that people are certainly interested in. And it's getting the attention of everybody. But at that volatility, I've got my doubts that it's going to do what we want as a digital currency. I want to remind you, even though I did not put out your updates here, over the weekend I certainly did my videos. So what I do in my videos, on a weekend I do a weekly one. So I don't look at the daily charts. I'm looking at the weekly for my longer term traders. And anyone that has seen what I do in the morning, I still do cover for you in my dailies. If I see a weekly chart that looks good, I'm going to bring it up and bring it to you. Because I'm looking at the swing trades, I'm looking at the longer term trades as well. To create a longer term trade, it starts inevitably with a shorter term trade that grows. The key is, how do you hold on to it for that period of time? And that's what I think I'm able to help you with ideas about. I'm going to cover the news in the morning. Then I'm going to take you to all the markets as to what the news in Asia and Europe looked like. I recorded 5:40. Sometimes I'm done and it's already in your hands. 6:15, 6:30 a.m. is very typical for this. So if you live on the East Coast, that's 7:30, California 4:30. But it gets you going with the markets. And I'm feeding you what the market's looking for in upcoming U.S. reports. Did anything happen in Europe that was important? It's the price of a cup of coffee. If that's too much for you, I get it. Then don't write me about me not putting out these free updates. Got it? I mean, that's the nonsense part. In any case, if you want to learn about the Bollinger Band course too, go to the website under Education, and I'll see you all tomorrow.